Mr. Rigasoy, thank you for your time. Just thought we'd run through a few quick questions to get a better understanding of how you trade so that the people that are going to be following your signals can feel a little bit more comfortable about the way you operate. And so we'll just might as well get started. Just to start with, can you give me a little bit of background about your past trading experience?
Yeah, sure. I've been trading since 2007. I ended up going full-time in 2009 while managing my own capital along with a couple of clients' capital. So when I started in 2007, I started trading E-mini S&P futures contracts. That went really well. But however, I decided to move over to Forex due to the increased liquidity and leverage as well as the volatility. So at the time I was just able to maximize my dollars, I guess, by trading in Forex as opposed to E-minis or any other instruments.
Yeah. Okay, cool. And where'd you learn to trade?
The fundamentals of my trading really came through my degree in finance. But I focused mainly on technicals and learned that through various textbooks and actual skin in the game, which I think is the best teacher. Because it really teaches you how to manage your emotions in a way that isn't possible in a book, you know? And obviously thousands of hours of screen time doesn't hurt either. But quite honestly, it took me a couple of years to manage the emotions and almost trade like a robot. So that definitely takes some time.
Yeah, because you get a lot of people trading on demo really well, and then they go live, and it just they can't replicate it because of that exact reason. So
right. And then I've also seen a lot of people kind of hold on to losers for a lot longer than they ever should, you know, hoping it turns back. So learning little things like that, I think are the only way you can do it is really through skin in the game.
Yeah, cool. All right, and just looking at your strategy, it looks like you prefer 3 to 5 pip scalps most of the time. What about that trading style do you like?
Scalping is my preferred method of trading because it keeps me liquid at the end of every day. And I really don't have to worry about any unforeseen news events, like let's say for when I'm sleeping or something. Okay. I always have the news events up while I'm trading, making sure, to avoid them or to get into them, whatever it may be. But it also lets me catch larger parts, larger moves and realize the money into my account as opposed to having an unrealized gain or loss,
Yeah, okay.
And quite frankly, I like being liquid because it's just a lot less stressful.
Yeah, so you get to sleep better at night.
Yeah.
Yeah, okay. And so scalping, I'm guessing you consider it profitable long term then?
Yeah, for sure. I definitely think it's profitable in the long term as long as there's constant analysis going on. So, I monitor every time frame from the 1 minute to the monthly chart for overall trend. But when I'm actually focused on scalping, I'm looking at a 1 minute to a 15-minute chart. I think that when I do my weekly analysis and I check out the monthly trend and weekly trend and things like that, I think I'm on top of the market. So I do think it's profitable in the long term. It's very possible to be profitable in the long term. And again, I don't know what you consider the long term, maybe 10 years, but I've been doing it since 2007. So that's about 5-6 years almost now.
Yeah. Okay. That makes sense. And, a lot of Forex newbies, they taught about risk-reward ratios and how you need to have at least 1-to-1, so that your winners are outweighing your losers. And, looking at your style, it's the opposite of that. You have small winners to large stop levels. How do you maintain consistent profitability with that kind of ratio?
I think this is again just experience over the years. When I first started trading, I would never take a trade that was less than a 1-to-1 risk reward ratio. Because money management is obviously key in this game. But since I've been trading, I've realized that my hit rate is above, 85% or maybe even a little bit greater than that. So I realized that I can play around with the risk, reward ratio a little bit and still maintain profitability over the long term.
Okay, that makes sense. And looking at late last year, 2012, just looking at your performance, it was pretty flat. I was just wondering if you could maybe shed some light on what's changed in the last month when you've started to become very profitable compared to the preceding 3 or 4 months.
Right. Well, late 2012 was really a tough time for me in the market, and I think many other funds as well didn't perform up to par. There was a lot of news coming out that kind of determined the way the EU was heading.
Yep.
the European Union, along with the currency as well. Along with Spain's situation and just a lot of things going on with rate decisions and stuff in Europe. However, in January, I kind of saw a lot more certainty in the market and volatility. Pretty much for all of 2013. So I was able to kind of pick it up a little bit. Even if you look at the frequency of trading, I started trading a lot more, in 2013 than late 2012.
Mm-hmm. Yeah. Okay.
And that was just the market. The market conditions were a lot more proper for scalping than it was late 2012 for me.
Yeah, well, the volatility was right down late last year. Like daily ATRs were about third their normal level and all that. So
yeah, which makes sense, because a lot of traders go on vacation in December and things. A lot of the bigger players don't really take huge positions,
Yeah, I know what you're saying. Okay, and just my next question. You kind of touched on it before, but how do you manage your emotions when you're in a drawdown? Like when you see your trade going the wrong way, how do you keep a cool head?
Oh, right. So I guess, I I did touch on that a little bit before, but, like I said, managing your emotions through drawdowns, are extremely important. Frankly, it just takes a lot of experience to control your emotions, but it is absolutely necessary to get a hold of that to trade successfully. You have to believe in your system and don't let your losers run. You believe in your system to a certain point. If your initial stop loss was 30, and you increase it to 60 and then you increase it to 100, you're kind of chasing the market at that point.
Yeah.
And you have to kind of let that go, right? So, again, just stick to your plan, your original plan, and you'll be fine. But it definitely takes a lot of time. I've seen a lot of newbies, kind of start freaking out when their trade goes into drawdown and they start adjusting, their whole strategy mid-trade. Yeah. And that's when you start kind of, messing up.
Yeah, okay. That makes sense. And as far as the trading room goes, obviously when you're trading, you've got your eyes on the charts and that. But if anyone has any questions, is there any particular session that they're more likely to catch you in the trading room?
Sure. Yeah. I'll probably usually join the room during the London session to answer questions.
Yeah.
It's pretty difficult to trade, like scalp, and be in the room at the same time because if people are asking me questions, I might miss a trade or things like that. So yeah, usually I'll join the room after I'm done trading or maybe after I have a couple of trades in the bag. I'll come on.
Okay,
so,
great.
London session to be short answer.
Yeah, awesome. Okay, thanks for that. Well, thanks for your time, Mr. Rigasoy. And what we'll do now is I might just leave you to do a bit of analysis on a few charts just so people can kind of understand what you see and why you trade the way you do. And yeah, I'll catch up with you in the trading room a little bit later.
All right, sounds good. Thanks a lot, Nick.
Okay, thank you. Bye.
Hey guys, hope everybody can see my screen. I just want to walk you through a couple of different trades to give you some more insight into why I'm taking these positions. So the first trade is right here on February 7th. I took a short, exited it about 15 minutes later at about a take profit of 3 pips. The reason I took this trade is because I saw a quick acceleration to the downside, followed by a pullback. Usually when I see something like that, I know it continues in the move of the direction of the original acceleration. So as you see, I also use this ADX indicator. So the price was below this MA. My baseline on the ADX is this 25 level. So at the time, right here, the ADX was about 31. The price was below the MA, so I decided to enter the short. In addition to this pullback right here, I don't have to drop the fib levels as much anymore because of the time I spend in front of the screen. But if we were to drop this fib, the pullback was most likely to the 38.2 level or the 50 level. Right here, yeah. So we can see right here, it respected this 38.2 level, and then it continued in the move that it needed to go, in the direction that it needed to go. So this is pretty common, this pullback to the 38.2 level or the 50 level. Okay, let's check out another trade. Okay, so very similar situation here. Again, a very quick acceleration to the downside, followed by a pullback, and then the move continues downward as we see. So again, on later in the day on February 7th, I entered another short the price was below the MA. The ADX was also above 25 at 29.09. There was also a nice pullback. Over here, as we can see, some level was respected. It was tested once, two, three times, even 4, 5 times, couldn't break it, and then it continued down. This most likely is either the 50% level or the 68.22 level. Yeah, 61.8 level, and it respected that, and then it continued down. If I held this trade a little bit longer, obviously I could have cashed more pips. But you know, I took the 3 point, I believe it was 3.4 maybe. Let's see. Yep, about 3.3, 3.4 pips with a drawdown of 3.7 pips. So that worked out nicely. Okay, let's see the next trade. Okay, we see we have another short here. Remember this one. This one I took a little bit early. This was, again, the price was below the MA. I saw a nice quick acceleration to downside. There was a pullback. I waited for the confirmation of the down move, but it didn't quite materialize right away. The problem with this one was also the ADX was at 24.5 as opposed to being above 25. What I should have done is waited until this bar right here and entered at the close of this bar, which would be right here. The ADX was above 39, showing there was strength in the movement. And then I could have had easily a take profit of about 9 pips, or if I held it, it could have been about 18 pips. Instead, I had a take profit of 3.4 pips, and there was a drawdown of about 12, 13 pips. If I held this longer, I could have easily got some more pips, about 12 pips. But however, I didn't. I got out of the market and I cashed my pips. But as we see, this acceleration is downside. There was a pullback, and then it continued down. Let's see another trade. Let's look for a loser. Okay, here we go. Here's a loser. Entered this trade when the ADX was slightly above 25. However, the price was above the MA. The problem with this trade was I ended up setting a take profit that was a little bit too wide, which was at about 5 pips. I should have exited right here at about 3.4 pips, 3 pips. The mistake can clearly be seen in hindsight, right? Hindsight is 20/20. But right here is a consolidation. The ADX is clearly below 25, showing that it's losing strength. I should have exited right here. Instead, I held, and I ended up losing about 17 pips. I knew that once this high was taken, that we would not be in good shape. So I set my stop loss a little bit above this high. And as you see, once this high was taken, the stop loss was easily hit, and I'm sure the market continues to rise after that point. So that was a loser. We had a couple of more winners over here. So I just wanted to show you 3 trades, three of them that were winners, one of them that was loser, to hopefully give you some more insight into how I'm executing these trades. I'm looking forward to making some pips with you guys, and have a good day.